Okay folks, so I'm going to actually combine two reviews into this video. So one from yesterday, the 17th of February, and we're also going to do today's trade review, which is the 18th. So let's do yesterday first. Yesterday, America was shut. The FTSE was open, but what I was saying is that when America is shut, we basically expect a quiet session on the FTSE. This usually happens. And when that happens, the previous day closing price usually gets hit. So on previous day's close was actually 74.09. So we expected the FTSE to go down there. We actually had the closing gap as likely to fill. So we were also saying that, look, the pivot action is at 74.28, but we need to see positive action above 74.50 to see move back up to 7,500. Otherwise, the FTSE is likely to consolidate between 73.50 to 74.40. So we had a buy trade yesterday, which actually wasn't triggered during session. Looked to buy 7,400 to 73.80, targeting 77.40, but actually that never triggered, so no point talking about that one. We're just saying short-term positive above 73.30, long-term positive. The 5-minute bar, I said I was going to confirm in the live room, and spikes up or down were okay. Now the reason we were okay for a spike of 24 points up or down was because if the market's likely to consolidate, then a quick move after the open up or down is likely to come back to the open price. And obviously the closing gap was good to go. So because we expect the market to go down to the closing gap, that gives us a good directional tool to use, because yesterday we were actually looking to sell the market because we expected the market to move down. So let's have a look at the price action from yesterday. Okay, so this is a 5-minute chart, and okay, this was the opening bar here. So you'll notice we basically spiked above 74.50, but we didn't get much of a move above there. So and remember, it's only bullish unless we see a decent move above there. So that little reaction there was a slight concern for the bulls, certainly. So this is why this area was really key. So in the live room, I was actually saying you could scalp this level. Scalping means going in with a tight stop and targeting a smaller amount of points. But I said basically you could get into this and sell with a stop above 53. So some of my pro traders did really well out of that trade. But the trade I said for the room was to wait for the 5-minute bar to break down by 2 points. So 2 points below the low is basically 23. Let me just put that in here. And we wanted to see it break here and then move back up to 70, yeah, just getting rid of that. 74.32 was our entry, wasn't it? So basically we broke the 5-minute bar up here, just consolidated for a bit, so and then it moved up and triggered us in here. I then said basically put your stop at 74.53. This is from the live room. Remember, these were the instructions given to you. And your target was down at 74.12. Okay, 74.12 was here. Now you're probably wondering, why did you not just take a 5-minute bar break here, Mark, as per the system rules? And why is your stop not above the 5-minute bar high by 2 points? The reason is I didn't actually use a pure system trade yesterday. I basically combined two types of methodology and I wrapped a trade around it. So getting in at 23 with a stop at 53 here didn't make sense because the risk reward doesn't make sense. Although we expect the market to move down to 74.12, having to stop all the way up here and getting in here doesn't make sense. So that's why I said, look, wait for it to break down which it did. It hit this level here at 74.23, but then wait to see if it retraces. Now, of course, had it just broken down and moved straight down to target, then it's a trade we just wouldn't have been able to take. It's just a missed opportunity. But we had to be patient for it to move back up to this level here at 74.32, trigger us in short. We then had a good, there's a real good chance that the market would then move down to 74.12 and not go above 74.53. So the market basically then consolidated for quite a while, actually for the pretty much rest of the day, and then eventually came down and hit our target down here. So that trade was really a mixture of the likelihood of the market just consolidating, the likelihood of the closing gap filling, a failed reaction up at resistance at 74.50, and then really just getting the risk reward right by waiting for a bit of a retracement back to get our optimal entry to give us 1-to-1 on the trade. So that was yesterday, guys. Now let me go through today's trade for you. Alright, so today's trade review, which was the 18th, so moving on to this one. So again, this is the long-term trade, which we all know about already. Yesterday I was basically just saying that we did see this market consolidate, which we expected, and the closing gap did fill. Today actually turned negative, so again I was looking to sell again today. Today we're opening lower, and a failure to see action above 74.30. That's really important, guys. I'll show you why in a second. Will give way to a move down to at least 7300 and possibly lower. So we were looking to sell a bounce up. We were opening lower. We're looking for the market to bounce upwards after 8 a.m. and then we're looking to sell with our stops above 74.30 and a target at 7300. So that was the trade we constructed today before the market even opened. Short term, we're just saying, look, we're positive above 74.30, but actually we were below this level, so we're actually now negative below 74.30. Long term, still positive. 5-minute bar breakdown was okay today. A spike up was good because that fitted in with this trade. So looking to sell that bounce up. So we did get this 20-point spike up. It was good to sell, and we're really targeting all the way down to 7300. Stops above again 74.30. You'll notice today I did not have the closing gap as likely to fill. The closing gap was actually at around 74.32, so that made no sense to target today. And of course the swing trade we're already in. So let's have a look at the price action now. All right, so 8 o'clock in the morning, which is when the FTSE opens, we opened at 73.60. So opening substantially lower than yesterday's closing price, up at 74.32. So what happened was we did get this bounce, and it was a real quick bounce. It just moved up and up and up and up. No reasons to sell this at this point in time. So we were looking at it in the live room saying, look, we need a sell signal to get into this. So I was looking for the sell signal, and eventually we got that. We got a rejection just below 74.20, which moved off, and I basically said to get into the trade. It was around 74.03 when I said to sell. And I said put your stop above 74.50, and we're gonna try and target. Sorry, no, I said put your stop above 74.30, and we're going to target down towards 73.70. Okay, so our stop was up here, because remember 74.30. As long as we stay below there today, remember on the reports we're saying below here we're expecting a move down to 7300, so it makes sense to put our stop above that key level. So it's this kind of stick here that gets us into the trade. It's negative, it's a sell signal, so we get in at 74.03. Our stop is placed up here. We're looking to get out at 73.70 down here. Okay, so that's there. So what happens was we get in here, and then it just starts falling off really quickly. So as it moved down, I basically said to take half profits at 73.86 here, and I said basically just pay for a stop. So if we've got short here and then we've taken half profits here, well then we've actually paid this, we've actually locked in the profit from here to there. So we can use this distance to pay for a stop above our entry, therefore making the trade risk-free. So had you got in at 74.03 and you'd taken half profits here, that's 17 points. So we add basically 17 points onto our entry at 74.03, and that actually gives us a stop at 74.20, because we've locked in that amount of profit. So really, actually, you had a free trade till 74.20. Some of you got in a little bit lower, so some of your stops were a little bit lower. Sorry, a little bit lower down. Some of you are at 74.15, some of you at 74.12. But the key thing is we decided to make it risk-free, and then we were going to have the target down at 73.70, but then I decided to actually make it all the way down to 73.00, given we were looking for a move down there whilst we stayed below 74.30. What happened was we took our half profits, and then it rallied, and it came up, and it basically stopped us out. So we didn't lose anything on the trade because we'd taken half profits, but we didn't gain anything either. But you'll notice actually that the market failed to get above 74.30. So there's still a very good chance that we are heading lower down to 7300, especially if we break below 73.50. So we'll just need to see what happens this afternoon when the American market opens. But that's the key level today, guys. If it breaks below 73.50, then I expect a quick move down to 7300. So that was really the trade today. It's just a shame we took half profits and got clipped out, but there you go. We've got another trading day tomorrow, and it could have easily turned into a loss. So where I can take half profits, it does make sense. All right, guys. Hopefully you found that useful, and we'll be back joining you in the live room tomorrow.